All right, so today we are going to do a setup on mini MNQ. I'm gonna just walk through it, basically everything I do when I'm setting up for my trades, getting ready, start the day. Market open at 9:30, but I like to set up, a little bit before, so I, get all my levels. So the key thing, all right, the key thing is when I first start, I look for the high of day. I look for the low of day, the pre-high of day, and the pre-low of day. So when you're looking for the high of day, right, you're basically going to the previous trading day. So today's Thursday. We're going to go to Wednesday and look for the highest point that price went to on the Wednesday, which looks like it'll be right here. Now, every time I do this, I start on a 5-minute time frame. And this is on the TradingView platform. I use TradingView and Tradeovate, but to do my technical analysis, I always use TradingView, right? So we go here, we find a higher day. Boom. That'll be the high of day, the previous trading day. So if it's Thursday today, previous trading day would be Wednesday, of course. And then we find a low of Wednesday, which would be right here. Now, it's different indicators that I use. Like when I'm doing Forex, I'll pop this on time base. Hold up. Turn the VWAP off real quick. Turn this shit off. They're not letting me use all the Jones I want right now. All right, so this is what I will use. It tells me basically the time, the different sessions basically. But I only use that when I'm trading Forex. Right now, mini MNQ, that's a future. So we're trading an index, mini index. So the NQ is the Nasdaq. So we trading the Nasdaq 100, mini Nasdaq 100, which is that's the index for the stock in the stock market. If you see right here, you see how this is today and this is Wednesday. So you can use this, if you need to figure out the exact, if you're on the different day, you want to make sure you're on a different day. And another thing is when I'm doing this, being as though we're not using Forex, I don't really worry too much about sessions. But if we was trading Forex, like we were trading the Canadian dollar or the euro, I would make sure that it's in session. So in session is in between Frankfurt and New York session. So anything outside of these colored lines we could consider out of session. But that's only with Forex. I don't really worry about that too much when I'm trading futures. So right here it'd be okay. This is considered the New York session. The Asian session, but we don't even worry about that right now. So I go ahead. That's the CM time baselines on TradingView. That's that indicator. So if you go here, go to click on indicators, you'll find all the indicators. You can type in anything, any indicator pop up. You know what I'm saying? You just type in whatever you want to use. I got all my indicators that I use already highlighted and favorite it, so I ain't really got to go through too much of that. So that's that with that indicator. Let me turn this off. Turn my VWAP back on. VWAP is it's my thing because it gives me a clear picture of what's going on and where price is overbought and overbought, oversold, underbought, undersold, whatever. All right, so we got our high of day and we got the low of day, right? So once I get that, you're gonna go 2 previous days, 2 previous trading days. So if it's Thursday, we got Wednesday, then we go to Tuesday. Now this is how we find the pre-higher day or the pre-lower day, which is the previous high or the previous low. So right now it's looking like this is my previous high of day on a 5-minute time frame, which is on a Tuesday. and it looks like this right here would be my previous low. Okay. So I go here, previous low. Oh, shit, I didn't mean to do that. And previous high. Make sure I make that previous high. All right. Now, once you find these levels, these are key factor levels to me. I love making sure I mark these out, every time, because it's just the base of where price action, where price went, in the previous day. So after I do that, I do what I call a top-down analysis, right? So a top-down analysis is when you go from the higher time frames down to the lower time frames. You feel me? So you're going to I start mine from the weekly time frame. I go all the way up to the weekly. Yes, I'm a scalper. Yes, I trade only. I be in the market for a couple seconds, but I consider myself an intraday trader and a scalper. So I'll make a day trade move, but within the moves, I'll find little scalps. So, I try to get as many levels as I can. When I mean key levels that are prices, there's levels where prices reacted already. All right. So when you're doing top-down analysis, you're going to look for what we call supply and demand zones. Okay. Supply and demand zones. So your supply zone is where the accumulation is built. Okay. So, all right, let me show you. Let me make it clear for you. Let me go to, before we go up to the high. Okay. So if you look here, right, you see you got accumulation. You got an accumulation. This is considered accumulation. When you see price moving like this, it's usually in a consolidated area, but you got your accumulation. So price doesn't consolidate. Consolidated mean it's moving sideways. You got an uptrend, downtrend, and you got consolidation. So this would be considered an uptrend right here. That's an uptrend. Then you got consolidation. And then you got a downtrend right here. This is considered a downtrend. Like that. Let me put it on the other side. Downtrend. It's a downtrend. Price broke right here. So you got an uptrend, consolidation, and a downtrend. Okay. So that's the trend. That's the way the market move. It either move up, down, or sideways. Okay. So your supply area is going to be the last candle, the last contrary candle. So the last up candle before price sold down. So basically, for supply is where you're gonna see where it's giving distribution at. Okay. So it's giving you distribution. Supply is distributing price down this way right now. Okay. It's distributing price down. So it's always the last contrary candle before price goes down. And demand is the last contrary candle before price goes up. Okay. So it's giving you a demand right here. It's going up. It's the last candle. You got accumulation and manipulation below, and then price goes up after that candle. So this would be your demand zone, and this would be a supply zone. Okay. Now, how do you know if the supply zone is valid or if the demand zone is valid? As long as no candle touched, as long as they haven't retraced and touched. So this don't count because price is still going down. But if you consider, say if we were looking at this right here, like, all right, this is an area. This don't matter. This don't count because it was an area of supply, but then price came up and touched it, which took it out. Okay, so that means it's an invalid area of supply. I'm going to break this down more, but I just want to just touch on the setup real quick. Just bear with it. That's why it's a recording. You can go back and listen to it and look at it however you want to look at it. Okay. So we're gonna start from the weekly and look for supply and demand zones. Okay. Other people call them order blocks. You can call it an order block or whatever you want to call it. Simple supply and demand. That's what I call it. Okay. So in the weekly, I don't see no supply area. You see prices actually in an area of supply. So it's possible, and this is a weekly supply. So the difference of the weekly and the daily and the 4 hours. So weekly, it's going to take a minute to get to them areas because it's moving on a weekly basis. So one candle equals 1 week on a weekly time frame. Each one of these candles equal 1 week. Okay. On a daily, each one of these candles on a daily time frame equals 1 day. All right, that's 1 day, and then so on and so forth. When you go down to the 4 hour, each candle equals 4 hours. One candle equals a 4 hour time spread. As you go, that's what the candles, whatever time frame you on, one candle equals that time frame. And you can see here on the countdown on the side of your chart, or the countdown, when the next candle is about to open. So we go to the weekly. Let's finish our top-down analysis. So since we don't find no demand, no supply, we go look for demand. This area is a good area of demand right here. See, for the weekly. So go to weekly. Boom. Okay. That area is touched now. You see how this was an area right here? This was a clear area, but the area came and got touched right here. This what made this area unvalid. It was touched right here. Okay. Was it the demand zone? But boom, it took it out right here. So price came here. So price broke here. So one of these weeks, price will go below this. This is no longer a valid supply area. It's no longer, an area, or you could say a support area. Because some people use support and resistance. We're going to mark out some support and resistance area also. But before we get to that, let's finish top down. So what I like to see is things like this. This is a good area right here for me on a weekly time frame. Because you got the accumulation, manipulation down, and then it goes up. And then you got the distribution above. Okay? That's one weekly. And then we got another one here. I mark this out. Then I just mark them all out for real. As many as I see that's not touched, that's valid. Okay, so you got boom, boom. You see how it's the last bearish candle. Bearish mean it's going down. Bullish mean it's going up. So it's the last bearish candle before the push up. That's your demand zone. Okay. We got one right here. And you got to make sure it wasn't touched by another bearish candle on the way up. Okay? Boom. So these are the areas that I feel like is relevant enough on the weekly time frame. Price moves fairly slow on the weekly, so we're not worried about getting every last one. You go down to the daily time frame now. And remember, this is your top-down analysis, okay? This is what you got to do when you're doing. This is what I do when I'm doing my technical analysis and how I find my key zones and key areas. All right. So next thing, I hunt for my supply areas. All right. On a daily time frame this time. So we go back, we go look down, we see price. We know this area right here is already a touch. Now, when I see a touched area, what I do sometimes and often, I'll mark what we call support and resistance. Now, support and resistance, right? If you think about it, support holds something up, okay? So you can call this a level of support where it's holding the price. Price is not breaking it yet. You feel me? It broke through. It took out the supply, but it's still a support area because it wicked. This line right here is called a wick. You got a candlestick, and then you got a wick. So when I'm looking for support areas, I see where it wicked out at, and that's a support area for me. When you're looking at resistance, you want to look at something like this. Like price is not going above it, or it's not breaking it. So it's like it's resisting. It's resisting from going up. Okay, so the resistance will look like this. On like you see that wick here, boom. Price didn't break this, boom, boom, but then it broke up here. All right. But this is an area that it reacted and went down. It didn't break that area right here. So I would consider this a resistance area, okay? But price broke it, so we're not going to, it turned into a support area. Once it breaks, basically once it breaks resistance, that resistance can turn into support, because price is going to start going up, and then it'll react to that area of resistance. All right, so let's finish finding the areas of demand. All right. Now, what I like to see is a confluence. Now, a confluence is when you have more than two or three support areas. Supply areas or demand areas that are in confluence with each other, that are right next to each other, or you can't even mark it because it's right on each other. That's how you know that's a high probability area that price want to go to for sure. You feel me? So like right here, if you look right here, the weekly and the daily is literally right here, like real close to each other, right? So you got that. That's a daily mark out. I'm gonna mark out a daily right around here. This area, it's like a good daily area for me. And I think right here is a good daily area for me also. Okay. Boom. All right, now. Okay. We have all our daily areas. Let's go down to the 4-hour time frame. Okay. Now, when you see the 4-hour time frame, now as you can see, as you go down lower and lower, it's more. You can see like, all right, it's more action within the bigger time frame. So like, if you look at a daily time frame, you see how price. Shit move slow. You see how prices give you more of a simpler structure. Right here, 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 then up. Okay? Boom, 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 boom. Then you go down to the 4-hour, right? This shit's dumb slow. Go to the 4-hour. If you look at the 4-hour, you see prices giving you a little more of detail because it's within the daily. It's 4 hours, okay? So you see it's giving you a little more detail within those big moves. It's giving you smaller moves within the bigger moves. You feel me? So you're gonna see the difference within the bigger time frame when you go to the small time frame. So you get more of a picture as you go down. You get more of a picture of what I call price action. Price action is how price is moving. You feel me? All right. So we got that like that. Now let's find our 4-hour areas. Let's see if we can find a 4-hour area of supply. Now this is a good order block here because if you look here, right, you see price reacted here, sold. Reacted here, sold. And it's damn near in the same area. So what I like to do, I like to mark that out as a order block like this. You feel me? I put a square around that John order block. Mark that out because that's a good area that price sells from. And price look like it's actually selling from there right now. But we're gonna just keep looking. All right. Let's see, we got any 4-hour demand zones. I see one right here. It's not a bad job. H4. See one right here. H4. Let's see. These are all pretty good zones. I'll mark this out. It's close, but I'll still mark it out. And you always want to mark the wick. H4. I'm always mark the top of the candle. That's what I do. Okay. All right, we got area right here. H4. And you see how precise these areas are. Like, price really works from these areas. H4. H4. Okay. All right. Those are more relevant areas. We got more, of course, but we worry about the more relevant areas right now. I'm not going to go to put a bunch of lines on the chart right now. I'm going to keep it relatively simple. Let's go down to the H1. Now this is usually one of the last higher time frames that I use, because this gives you a good picture of like a more inner, quicker moves. So H1, we got one right here. Just mark all your date, mark all your stuff out. And you want to do this, you want to take your time. You want to mark these areas because these are key areas that you're going to be using. You know, this is price action. Especially using futures, trading futures, price is going to pretty much repeat itself a lot. So you want to make sure you're marking everything up. Okay. Got one right here. And sometimes I know when they're close, it's like, what's the point of marking it? But you know, it could be a higher probability. You like, all right, price is going to, once it break my H4, you can scale in and get a scalp right to this H1 real fast, and that's, you're not leaving nothing on the table if you just mark everything. You feel me? So that's why I like to mark all my areas that looks like an important area to me. Okay, H1. Drop down here. Got an H1 right here. H1. Got one right here. And these are one of them confluences right there. H1 and an H4 in confluence. I could even mark this one. It's a better probability because it's lower. But this is like the last candle before the up break for real. So either one. I'll mark this one because it'll hit that first. We got another one here. H1. And then we got one here, H1. All right. So relatively, this is what the chart's looking like now. These are all my areas. All right. And then now when I go to the M15, the 15-minute time frame is usually where I find like most of my confluence areas. That's where I find my I use the 15-minute, the 5-minute, and the 1-minute for the confluences of the there's three areas, the three close areas. All right, because these areas are what's gonna make a high probability trade happen. All right, so if you want a 15-minute, you can see right here. I got one right here in confluence with the pre-higher day. So that's a good area. That's a great area for me to look at, okay? That's an area of supply. So I know price may sell. It's a high chance that price is going to sell from here. And you can see this big gap, this big imbalance gap right here. So price If price comes up here, boom, tap this. 9 times out of 10 it'll sell from one of these areas, okay? And then we got another one even right here. This is a high probability one, high probability area right here. And what price also like to do when they go to these areas, price like to find liquidity. Liquidity is basically what the big buyers and big sellers, the big institutions use when they see a bunch of orders, and you know they'll sweep the orders to get a better, more bigger sell or bigger buy. Okay, so if you see like right here, this area buyers sellers sold right here. So when price come up, 9 times out of 10 they'll come catch this on this area, wipe these sellers out, boom, and that's fine. And they'll find liquidity here. Let me see an example. Okay, like right here, instead of price went down, boom, came up here, right? Instead of them selling right here and price going straight down, the institutions found liquidity up in this area and broke it and sold from here and got a bigger, you see it's a bigger push down basically. So that's the difference. I'll get more into liquidity and all that after I do the setup videos and all that stuff. I just want to keep everything real simple. Okay, so we got that. I see an area of demand, 15-minute demand right here. Okay, and let's see what else we got. Got an M15 demand right here. Okay, 15. Okay. And it's not really, we have good areas where though we don't got to go too crazy on the M15, but I don't want to miss really too. I don't like missing areas too much, so I mark them all. But that's when usually these areas you can catch support and resistance zones when it's this low. But you really want to mark your supply areas and your close demand areas, right? All right, so we go down to the 5-minute time frame. And let me show you. This is where you really see how price makes the same demand zones and the same supply zones. So look here, boom. You got a literal supply right to the almost to the pip, almost to the T, right to the mark. Mark that. Then I'll come up here. I'll mark this. M5. Now right here, this is an area I sold from when I caught my last trade. You see how price broke down, came, touched them areas, made this area supply. See one right here, directly to the pit. M5. And then this one is perfect. Well, this the M5. I thought this was an M15. Let me see. Did I mark that as an M5? I meant to mark that as an M15. Let's see. Oh no, we got an M15. Yeah, we got the M5. I marked that right. All right. And these are how you find good entries. You know, you look at your confluences, and your confluences are basically confirmations. I know price is going to go here because you got more than one area of supply in those areas. So I know price is going to eventually get there, and then it's going to sell once it get there. Like you can even look and see price is already trying to get to that area. Like it's going up to that area. Okay. So on the M5, we got that. All right, let's go down to the M1. The 1 minute, all the way down to the 1 minute time frame. Okay. Now we're down to the 1 minute. All right. M1. So you see price is taking these areas out right here. All right. So when I get that low, I mark those support and resistance zones. I don't really worry about. I only worry about the confluence areas. So boom, M1. M1. Remember, it's the last candle before the push. That's your support areas and your demand areas. M1. M1. Okay. All right. Cool. So once I mark all those areas, I know it looked like a lot on the chart, but these are your areas. Okay. Now, when an M1 and things like that, you see how these areas react? These are what I call resistant zones or resistant areas. So I'll mark it like that. Boom. I'll mark that with a straight line. And I know if price don't break this, then it's going to go down. But if price break it, then it's going to go up to one of my supply zones. Okay. So always keep that in mind. It's good to have those areas marked out. Even however many, you can mark as many as you want. I don't really like to have too many of those lines on my charts, but you can see the other areas are so on point that you won't even need it. Like a support, I feel like a supply and demand area is way more sturdier than a support and resistance line. Support and resistance, it's a good help though. It's a big help. All right. So basically that's what that is. What you're seeing right here, this is called the VWAP. It's basically an indicator I use just to, like I said, let me know when price is overbought or undersold or whatever, like, you feel me? So that helps a lot too. So right now, I'm gonna go back to the 15-minute. Now, after I do this type of analysis, I wait for my 9:30 candle to open, and then I'll do the orb, which is the open range breakout. And that's basically when I mark the high and low of the opening candle and wait for price to make a move, make a break, basically, whether it breaks up, break down. Of course, you gotta wait for the retracement either way. If price don't retrace, that is not the setup. And this is something that I'm still learning to this day. Like, you know, I'm not a 100% great trader yet. Like, this is literally my second year trading. So I'm still learning. Like, this shit is really like college. Like, you know what I'm saying? This shit is not easy. You know, I'm just able to break this down like this, and I'm understanding, and the strategy is getting better and better. The win rate is getting higher. So after you do this part, you found your zones, found your areas. Now you just want to wait and basically wait for your opening candle. You feel me? So that's the breakdown on that. I'll show it in a Forex. I'll do a Forex breakdown also. I haven't really been in the Forex market, but we could do a Forex breakdown. I'll post that soon. But this is just technical analysis on the charts for mini NQ for the mini Nasdaq futures. And that's what I did. Basically found, start off on a 5-minute time frame. 5-minute time frame. You mark your high of day and your low of day, which is one previous trading day afterward, before. So if it's Thursday, then you're looking at Wednesday for the high and low of the day. Okay? And you do it on a 5-minute time frame so you can mark the exact area. You don't want to be off. Okay? And then for the previous high and the previous low of the day, you're going to go back to previous trading days. All right? And then after that, you're going to look for supply and demand zones. Those areas are the last. The supply zone is the last candle, the last contrary candle before the push down. I'm sorry, the supply area, your supply zone is the last contrary candle before the push down. Your demand zone is the last contrary candle before the push up. All right. So these candlesticks, these charts and all of they different. Mine's customized to my high school colors. But some people, when you start it, it'll be green and red, of course. Like that's the chart. That's the the standard chart candle color. But what you want to do is always look for, when you're looking at supply, you're looking at the last, would that be the last green candle before it goes down? And when you're looking for demand, you'll be looking at the last red candle before price goes up. All right, and that's just that. That's the setup on that. So right now we're just gonna wait till about 9:30, and I'm gonna jump back in, and I'll show the opening range breakout. All right.